margin calls went out for stock accounts. The margin buyers may not have been able to sell their shares because still about 20% are not traded. Number two, they can't sell their properties because you can't sell overnight the properties. So the margin call has to be met the next day, and a property transaction may take, 3 months until you close. And maybe there was some corporations or individuals, they were holding gold, and so that they could liquidate. That is an explanation that I could sympathize with. Or you could say, because of the strong dollar, people became or had hesitations of owning gold, because if the dollar is strong, why would I own gold? And so, there are lots of explanations. Simple explanation is, of course, that there were more sellers than buyers at that particular time. Now, if you look at the bull market in gold, 1999, $255, went to $1,921 in September 2011, and then we had this correction, which now we are 2015, 4 years old, and the price was always holding around 1,100, and now it looks like it's broken down on the downside. And then you have to ask yourself, well, is it a breakdown that will lead to further selling? In other words, prices would move lower and find the low, maybe, $700, $800, $900, $1,000, or is it a final liquidation from which prices will start to move up? I really don't know. All I know is I own gold, and it doesn't worry me that it's went down, because as I mentioned to you, I have this diversification, and the bonds in US dollars and the cash in US dollars has been a good investment essentially over the last 12 months. Right. And then I own equities and I own properties in Asia that have been reasonably good investments. So the fact that gold is going down doesn't worry me. And I buy every month a little bit. But I think on this weakness, I will increase the position substantially, because I had maybe, say, 25% in gold, but because equities and properties went up, and the dollar went up, and gold went down, the allocation to gold is no longer 25%, but maybe only 10, 15%. So then I have to stock it up again. I would say an individual should definitely own some physical gold. The bigger question is, where should he store it? Because I think if we think it through, the failure of monetary policies will not be admitted by the professors that are at central banks. They will then go and blame someone else for it, and then an easy target would be to blame it on people that own physical gold, because they can argue, well, these are the ones that to take money out of circulation, and then the velocity of money goes down. We have to take it away from them. As happened in 1933 in the US. And with our brilliant governments in the US, in Europe that follow US policies, and with the ECB talking every day to the Federal Reserve, they would do the same in Europe, take the gold away from people.